Elon Musk faces crisis as Tesla's staggering $380 billion valuation evaporates overnight, marking one of the most dramatic stock plunges in recent history. With shares plummeting over 15%, the fallout sends shockwaves through the market, leaving investors and fans alike questioning the future of the electric vehicle giant. And what does this mean for Musk, his empire, and the broader tech landscape? In this video, we dive deep into the chaos surrounding Tesla's financial collapse and Musk's frantic response, revealing the shocking implications for his leadership and the company's future. Stay tuned as we unpack the details behind this unprecedented meltdown. Dramatic stock plunge. Tesla, the electric car company that many people admire, faces a shocking drop in its stock value recently. This was not just a small dip, it was a dramatic plunge that left investors and fans of the company in disbelief. In a matter of hours, Tesla's market valuation fell by a staggering $380 billion. This was a huge loss, and it raised a lot of questions about what went wrong. To understand how significant this drop was, let's look at the numbers. At its peak, Tesla's stock was valued at around $1,200 per share. However, within a short time, it plummeted to about $600 per share. This means that the stock lost nearly 50% of its value. For many investors, this kind of loss is hard to swallow, especially for those who had put their money into Tesla, believing it would continue to rise. The timeline of this decline is important too. It all started when Tesla announced some changes in its production plans. Investors were worried that the company might not be able to keep up with the growing demand for electric vehicles. This uncertainty led to a wave of selling, as many people rushed to get out before the stock fell even further. In just a few days, the stock dropped dramatically, sending shockwaves through the market. This wasn't the first time Tesla had experienced a significant downturn. In fact, there have been several moments in the past where the stock took a big hit. For example, back in early 2020, the stock fell sharply due to concerns about the COVID-19 pandemic. Many people were unsure how the virus would affect car sales and production. However, after that downturn, Tesla quickly bounced back and even reached new highs. This history of ups and downs has made investors both hopeful and anxious about the company's future. Comparing this recent drop to previous downturns shows just how dramatic it was. The $380 billion loss is one of the largest in the history of the stock market. In the past, other companies have experienced big drops, but Tesla's decline stands out because of how quickly it happened. It was as if the stock was on a roller coaster, climbing to great heights and then suddenly plunging down. Investors often look for patterns in stock performance, hoping to predict what might happen next. Some experts believe that this recent drop could be a sign of bigger problems within the company. Others think it might just be a temporary setback. The truth is, predicting stock prices is tricky, and even the best investors can get it wrong. As Tesla continues to navigate this challenging period, many are watching closely to see how the company responds. Will it be able to regain its footing and climb back up, or will this downturn lead to more significant challenges ahead? The reason behind the decline. Well, the company's financial results show a sharp decline that has left many investors worried. In the latest report, Tesla announced a staggering 70% drop in its profits. This means that the money they made after covering all their costs fell dramatically compared to the same time last year. For a company that was once celebrated for its growth and innovation, this news was hard to swallow. The reasons behind these declines are multifaceted. One major factor could be increased competition in the electric vehicle market. Other companies are stepping up their game, launching new models and offering better prices. This means that Tesla, which was once the only player in the game, now has to fight harder to keep its customers. With more options available, buyers might be choosing other brands over Tesla. Additionally, global economic conditions have also played a role. Inflation has affected many industries, including the automotive sector. Prices for raw materials have risen, making it more expensive for companies like Tesla to produce their vehicles. This could lead to higher prices for consumers, which might deter potential buyers. The combination of rising costs and increased competition creates a challenging environment for Tesla. Investors are now left wondering what this means for Tesla's future. Will the company be able to bounce back and regain its position as a leader in the electric vehicle market, or will these financial struggles continue to weigh it down? As the dust settles from this financial report, everyone everyone is keenly watching how Elon Musk and his team will respond to these challenges. The next steps they take could be critical in determining whether Tesla can recover or if it will continue to face difficulties in the coming months. With all these factors at play, the financial landscape for Tesla looks uncertain. The once mighty giant of the electric vehicle world is now at a crossroads, and how it navigates this tricky path will be crucial for its survival and success in the future. Investors, fans, and critics alike are all waiting to see what happens next in this unfolding story. Elon Musk's public reactions. Elon Musk, known for his bold personality and ambitious projects, found himself in a tough spot when Tesla's valuation dropped by a staggering $380 billion overnight. This massive loss sent shockwaves through the financial world and left many wondering how Musk would react. In the days following the drop, Musk took to social media, where he often shares his thoughts and updates. He tweeted several times, mixing humor with a touch of seriousness. One of his tweets read, "The stock market is a place where people with money go to lose it." This comment reflected his frustration, but also his tendency to see the lighter side of difficult situations. Musk's followers, who are used to his unconventional style, reacted with a mix of support and concern. Some fans expressed their loyalty, while others questioned the future of Tesla. Musk also made headlines with his comments during interviews. In one discussion, he acknowledged the challenges Tesla faced, stating, "We're in a transition phase. It's not easy, but we're working hard to get through it." His words hinted at a determination to overcome the obstacles, but there was an underlying sense of worry. Musk's usual confidence seemed slightly shaken, as if he was grappling with the reality of the situation. Another notable moment came when Musk addressed his employees in a company-wide meeting. He encouraged them to stay focused and not to let the stock price define their work. What matters is our mission to accelerate the world's transition to sustainable energy, he emphasized. This statement aimed to rally his team and remind them of the bigger picture. However, some employees couldn't help but feel the pressure of the company's financial struggles. They wondered if their jobs were at risk and if the ambitious goals Musk set were still achievable. In the weeks that followed, Musk's social media activity became even more unpredictable. He tweeted about everything from space travel to memes, but he also shared updates about Tesla's upcoming projects. For instance, he announced plans for new vehicle models and improvements in battery technology. This was his way of reassuring investors and fans that Tesla was still moving forward, despite the recent setbacks. However, some critics pointed out that these announcements felt like distractions from the more pressing issues at hand. Musk's personal life also seemed to be affected by the turmoil. Friends and colleagues noticed he was more reserved than usual. He was known for his late-night brainstorming sessions, but lately he had been spending more time alone. Reports emerged that he had cut back on social outings and was focused on work. This change in behavior raised eyebrows among those close to him, who wondered if the stress of the situation was taking a toll. Despite the challenges, Musk remained a figure of intrigue. His ability to bounce back from setbacks had always been part of his story. As he navigated this difficult time, many were curious to see how he would adapt and what new strategies he would implement. Would he manage to turn the tide and restore Tesla's reputation? Only time would tell, but one thing was clear: Elon Musk was not one to back down easily. Leadership shakeups and share sales. Just when everyone thought the company was on a steady path, some surprising actions from its top executives raised eyebrows. Key figures at Tesla, including some of the company's most important leaders, decided to sell off large amounts of their shares. This wasn't just a few shares here and there. We're talking about millions of dollars worth of stock. For example, the chief financial officer, Zach Kirkhorn, sold around $30 million worth of Tesla shares. This was a significant move, especially since Kirkhorn had been with the company for a long time and was seen as a key player in its financial strategies. When someone in his position sells such a large amount of stock, it can send a message to investors. It might make them wonder if he knows something they don't. Is he worried about the company's future, or is he just cashing in on his success? Another notable sale came from the head of Tesla's engineering team, who sold shares worth about $20 million. This raised even more questions. Why would someone so deeply involved in the company's technology and future plans decide to sell? Investors began to speculate. Some thought it might be a sign that these leaders were losing confidence in Tesla's growth. Others worried that if the people running the company were selling their shares, maybe they didn't believe in the company's future as much as they once did. These actions didn't go unnoticed. The stock market is a sensitive place, and news like this can shake investor confidence. confidence. When executives sell their shares, it can lead to a drop in stock prices. Investors might panic, thinking that if the leaders are selling, there must be something wrong. This can create a ripple effect where more and more people decide to sell their shares, leading to even lower prices. In Tesla's case, the timing of these sales was particularly concerning. The company had just seen its valuation drop by a staggering $380 billion overnight. This kind of loss is hard to comprehend. It's like losing the entire value of a small country in just a day. With such a massive drop, the last thing investors wanted to see was their leaders cashing out. It felt like a sign that things were worse than they seemed. The implications of these share sales were serious. Investors started to question the stability of Tesla. Would the company be able to recover from this loss? Could it continue to innovate and lead in the electric vehicle market? The uncertainty created a tense atmosphere. Many investors began to wonder if they should hold on to their shares or sell before things got worse. As the news spread, analysts and financial experts weighed in. Some argued that the executives might have personal reasons for selling, like needing cash for other investments or personal expenses. Others pointed out that selling shares doesn't always mean a lack of confidence in the company. Sometimes it's just a part of financial planning. However, in a time of crisis, these explanations didn't ease the worries of many investors. The situation at Tesla was a reminder of how quickly things can change in the business world. One moment, a company can be riding high, and the next, it can face serious challenges. For Tesla, the actions of its executives were a crucial part of the story. They highlighted the uncertainty surrounding the company and raised important questions about its future. Would Tesla bounce back, or was this the beginning of a downward spiral? Only time would tell, because Tesla faced these leadership shakeups and share sales. The company was also grappling with external pressures that added to the tension. Market and competitive pressures. The electric vehicle market was becoming crowded and competition was heating up. New companies were entering the scene, eager to claim their piece of the electric car pie. Traditional car manufacturers like Ford and General Motors were ramping up their electric vehicle (EV) offerings, trying to catch up with Tesla. This surge in competition made investors nervous. They wondered if Tesla could maintain its edge in a market that was rapidly changing. Market sentiment also played a significant role in Tesla's decline. Investors are often influenced by how they feel about a company and its future. If the mood is positive, they're more likely to invest. But when doubts creep in, as they did after the recent share sales, people start to pull back. The stock market can be a bit like a roller coaster, with emotions driving decisions just as much as facts. With Tesla's stock price plummeting, the overall sentiment around the company shifted from excitement to worry. Investors began to question whether Tesla could continue to innovate and lead in the electric vehicle space. Broader economic trends were also affecting Tesla. The economy was facing challenges, including rising inflation and supply chain issues that made it harder for companies to get the parts they needed. For Tesla, this meant potential delays in production and delivery of their vehicles. If customers had to wait longer for their cars, they might choose to look elsewhere, especially with so many new options available. The uncertainty in the economy made it difficult for investors to feel confident about Tesla's future. Additionally, the tech industry was experiencing its own set of challenges. Many tech stocks were seeing declines, and investors were becoming more cautious about where they put their money. Tesla, being a tech-driven company, was not immune to this trend. As the excitement around tech stocks faded, Tesla's stock was swept along with the tide. Investors started to question whether the high valuations of tech companies, including Tesla, were justified. All these factors combined created a perfect storm for Tesla. The competition was fierce, market sentiment was shaky, and economic challenges loomed large. Investors were left wondering if Tesla could adapt and thrive in this new environment. Would the company be able to innovate fast enough to stay ahead of its rivals? Or would it struggle to keep up, risking its position as a leader in the electric vehicle market? The stakes were high. Tesla's ability to navigate these pressures would not only determine its own future, but also impact the broader electric vehicle market. If Tesla stumbled, it could set off a chain reaction, affecting the confidence of investors in other EV companies. The electric vehicle revolution was at a crucial juncture, and all eyes were on Tesla to see how it would respond to these mounting pressures. As the dust settled from the recent turmoil, the question remained, could Tesla rise to the occasion, or would it find itself overwhelmed by the challenges ahead? Investors, competitors, and fans of the electric vehicle movement were all waiting to see what would happen next. The future of Tesla was uncertain, but one thing was clear: this was a pivotal moment in the company's history.